Right, good morning. Today is April 3rd, 2024. How time flies. So here we are in spring, and the market is, I believe, seasonally speaking, April's usually a pretty good month. I know it's a good trading month. It's always historically in the past has been kind of active for whatever reason as we get into springtime. And so, of course, the market itself is right up against the all-time highs. And of course, everything depends on your time frame, but just in the past couple of days here, we've started to see a couple little cracks in the little cracks in the facade is the first thing that comes to mind. But anyway, so for like the past couple of few weeks, couple of months, I've been talking about this trend line, which looks real nice and orderly and pretty, at this particular angle. If I sort of zoom out a little bit. But the thing of it is, as we know, it's all about perspective, right? So the further I zoom out on the chart, the more sort of unsustainable, I guess you would say, that trend line is. And of course, talked about this fairly recently, that the idea of drawing like really super um, trend lines with really super high angles are just likely to get violated by virtue of the market trading sideways, which is basically kind of what we have here, right? Like this particular trend line. And honestly, I extended it all the way back to last November because I wanted some perspective, because there's the October low, right? As you recall, the market was in sell-off mode, reached a low in late October, and then it's been rallying ever since. So, in theory, this trend line could start right here at the beginning of 2024, and it's just basically drawn across the lows. It's not. I noticed that it's not perfect. There's if you zoom in far enough. Well, here, hang on. Let me just fix it, right? Because the idea was to sort of capture. There we go. I'm going to close that. I'm going to save the thing. Um, the idea was to capture these three touches. One, two, three touches that have occurred so far in 2024. Um, and so, as you know, oh wow, the market just like in the last minute just took a huge spike up. Interesting. Yeah, I mean, as you know, I always joke about, how trend lines and all this stuff is not measured in pixels. But yesterday was kind of interesting. I mean, we had a fairly significant gap down, and quite frankly, I'm not 100% sure about what that was about. But you can see the difference between the trend line I had and when I kind of so to speak fixed it, and the angle and the angle and a couple of pixels makes a big difference, right? Like I could just as easily, make this thing so that it looks reasonable, and and yesterday and today are holding the trend line. And the way that I just adjusted it, it's like the market, spent all yesterday below it. So anyway, it's just a visual guide, right? But the market is essentially, and the funny thing is, I had something drawn on here that I deleted, and I'm going to put it back on right now because it's kind of important. This right here, this was sort of like a flat top breakout. So let me close that. Let me save it again. Um, so you remember, like, a couple weeks back, a few weeks back, the market, spent a lot of time sort of consolidating sideways, and I had this little sort of what I call, a flat top. It had a flat top on it, and so it broke out, and all it's basically done the past couple of days, people get all excited about a sell-off or whatever, but it's just basically, um, retested the breakout area. So anyway, from a and so quite frankly, I mean, here's the question. Does it make sense for me? Like I may have actually, when I adjusted this trend line, now it's into this one a little bit and it's touching that one. So, does it make sense? There we go. To get the bottom of that can bar and the bottom of that bar precisely and exactly. Sorry about all this noise, but um, and so, is the trend line broken? Well, it's a matter of it's a matter of opinion, I suppose. That looks pretty good. I like that. So yesterday was kind of a strange day. You had a gap down and a sell down, and then it formed like a little doji, right? If I change this to a candlestick chart, you can see, whoops, you can see it was kind of like just a little doji where it sold down, and then at the end of the day, the buyers ran it back up. So, and then look at today. Today we're pushing into that gap. I guess based on, I don't know. I mean, it looks to me like the ISM non-manufacturing numbers that just came out were weak, and so perhaps I mean, here's the thing: is all this macro stuff and all this, when is the Fed gonna lower rates and when's the Fed gonna pivot and all this is kind of, I prefer. Well, it's all fun to talk about. I mean, without that kind of stuff, CNBC wouldn't have anything to talk about, right? Basically, without all the macro and this and that. And then, of course, the guests coming on talking their book. But the whole conversation about, what's the Fed going to do and when they're going to pivot and all this. Oh, they're showing that right now on CNBC. The funny thing is I've been watching CNBC since stocks traded in fractions, but about the past year or so, it's on mute all day. I mean, I almost never listen to anything that's being said on there unless I see somebody I know or somebody interesting. But anyway, this whole Fed pivot thing, um, the chances of them. The funny thing about it is they're acting like, everybody wants the Fed to start lowering rates again, and we've talked about this before. As soon as they do that, then historically speaking, the Fed doesn't start cutting rates until the economy sucks. In which case, in the past, I mean, they cut rates when you're in a recession or the economy's, weakening and all that, and it's typically not good for the stock market. So it's just ironic. I mean, the market is like rallying on expectations of, the Fed starting to cut rates or whatever. And historically speaking, when they start cutting rates, it's because the economy's bad and the market typically falls. You know, I think, and I read somewhere, where was it? I mean, it didn't dawn on me, but I read somewhere yesterday that we haven't had a recession in like 16 years. And so there's this whole idea that the economic cycle, the Fed can overcome the forces of nature, which is the economic cycle, um, and avoid recessions, and keep everything just perfect. Well, it's clear that there was that Fed policy is what, well, I won't say, contributed 100%, but this whole thing about inflation, I mean, I was years ago on this very show, at least a couple of years ago, I was, talking about how the pandemic response created the inflation, and it's like, they pretend that it's everything else except for the fact that they created trillions of dollars out of thin air and threw it out there. And so, that's the old school definition of inflation. And all these thousands of PhD economists that work at the Fed, had to have known that their policy was going to create inflation, and now they act like they're mystified that everything costs 20 to 30% more than it did a few years back. And then the worst thing about it is everybody likes to pretend that, the rate of inflation is the same thing as like prices, right? And people are waking up to that. I see this all the time now. I mean, I was talking about this like a couple years back when inflation was really, the rate of inflation was raging, that, if inflation was zero, the damage has already been done. The prices of everything are much, much higher than they were, and they're not coming back down, even if the rate of inflation was, 2% or 1% or 0%. If there was no inflation at all, it's not like they're going to be out, lowering the price of insurance, right? And then, of course, the CPI numbers have, nobody believes those anymore because what they see in real life. So, and then there's this whole thing that with like I saw yesterday, where the California $20 an hour minimum wage goes into effect, and the result of that is the obvious. It's like, these people never studied economics 101, and so all these fast food places are laying off workers and cutting back hours and stuff, and raising prices to the customers. And so, the last thing that you want is a wage price spiral. And the funny thing is that when you complain about inflation, to certain people, economists, the first thing that they'll say is, well, you make more money now. And so, but we all know that wages never really keep up with the cost of living, and the cost of living has nothing to do well, I mean, the cost of living has been rising like literally every year since I was born, and probably everybody else. And some years the cost of living didn't go up very much and all that. So prior to 1971, I believe it is, inflation and the cost of living and all that good stuff remained pretty steady. But I've actually seen some interesting videos where people compare like wages and the prices of stuff, from way back in like the 50s or 60s or whatever, 70s. Like you compare the price of, how much people made to the price of a home and different things. But I don't know. I mean, it's a rabbit hole when you start talking about inflation. But the whole way that our money system is designed is that money's debt, and it's just designed to be sort of like a big humongous Ponzi scheme that they can keep going for however long. And so, quite frankly, the stock market, let me go to nothing really happening on the daily. As far as I'm concerned, the market's still at new highs. I mean, that trend line I did talk about how that particular, here we go. This is the one I like to start with. The trend line, which I do not have drawn on the weekly chart, um, that goes back to the lows or whatever. I talk about how that trend line is just too steep. And so, I mean, can the market keep going up at this particular angle? Maybe, maybe a little more. Like, you kind of see you kind of see like a little flat top thing here, and you see this week's kind of down, but it could rally up more. So, I mean, there could be more weeks of this being intact, but um, at some point, we're going to get a correction of some degree, or at least, like a couple of week pullback. But here's the funny thing is, if you go, search for CPI inflation calculator, and you find that little calculator at the BLS website, and you go back to the all-time high, previous all-time high in the market back here, like, this was the high it had to break. Anyway, as I've been saying here for weeks, if you go back and you take, 48.18 or whatever this high is, and you plug it into that inflation calculator, the S&P needs to be at 5,300 in order to have the same purchasing power as it did at the beginning of 2022. And so, that's actually pretty important because of the idea that, I mean, that's why people invest in stocks is the keep up with the rate of inflation, or not the rate of inflation, but the nominal prices that are caused by the compounding rate of inflation. So, long story short, when the S&P hits 5,300, it's basically going to be equivalent to what it was here, right? So adjusted for inflation. So if there used to be a website I would go to and look at the S&P adjusted for inflation, it's a completely different picture. And worse yet, I mean the weird thing that's happening right now is the price of gold and oil and some commodities are are starting to really pick up. So I want to go back to a daily chart and look at WTIC, I think it is. The price of oil here. So, yeah, here you go. Price of oil, $85 a barrel, which is, obviously, it was higher or whatever. Oil's been all over the map, so I think yeah, I don't follow oil all that closely, but I do follow the price of gas at the corner gas station, right? And so it used to be that every time it got close to $4, then people start to notice, and at least in my area, I mean, out in California, and it's a whole different world out there. Um, But around here, and I'm originally from the Midwest, and so around here, um, oil or I'm sorry, gas like three something a gallon is fairly reasonable, but then it starts creeping up, and I'll tell you, there was, I guess it was back here at the beginning of 2022 or something, but when it got to like 4.99. I remember this. Like, I was thinking that, you know, gas, a gallon of gas at four something kind of hurts a little bit. At three something, it's reasonable, but at four something, it hurts. And if gas hits $5 a barrel, look out, because well, it's inflationary. See, this is the whole thing. The Fed, went through goes back to what I was saying. The Fed went through their whole interest rate hiking cycle, and then they've paused now. They think that they think they've conquered inflation, right? And everybody's talking about, well, now are they too restrictive? They can lower prices again. And so, yeah, the rate of inflation has been coming down from 9%. Right? I mean, it was. You guys remember that a couple years ago in the summer, it peaked at like 9.1 or 9.3%, and so all that compounds on top of each other. But long story short, at the same time that inflation was raging and compounding, and the reason that everything's 30 to 20, 30, 50% higher than it was a few years back, at the same time, the government has been releasing oil from the Strategic Petroleum Reserve to hold the price of it down, right? And then, and then all of a sudden, and somewhere back here, somewhere I remember reading news releases that we were going to refill the Strategic Petroleum Reserve, and the government was going to be buying oil at at 60, $70 a barrel. Well, all of a sudden, here we are, look at this pattern on this chart, right? This is a pretty bullish looking pattern to me. You've got, obviously you've got this sort of anomaly here, right? Anomaly, but now you've got this rounding, you got a rounding bottom here. If I could draw an arc, I can draw an imaginary arc with my mouse here. This is an extremely bullish pattern. If I didn't know what this was, the only thing, obviously, is this. There's a big spot of resistance right there, and so I talk about not paying attention to the news. Talk about not paying attention to the news and all that stuff, and and fundamentals and technicals and all that. But I will tell you this, that this is a pretty bullish looking chart. These W patterns are, I've talked about that in the past. Sometimes some of the most powerful patterns I've ever seen are when something forms a W and then it breaks above like the center part. So visualize that. And that's still a long ways out, right? But given everything that's going on in the world, um, and I'm obviously no expert. You get all these people that debate whether oil's plentiful or scarce and how much oil is available, but um, that's a whole nother conversation. But all I can tell you is, well, and I should be on a weekly chart anyways. I don't know what daily. I mean, daily charts are very noisy, but wow, this is really big picture stuff. Look at that. Look at that parabolic run up there and collapse. So, speaking of parabolic run ups and collapses, there's lots of charts out there. Yeah, so this weekly chart looks a little bit better. It's basically the same pattern, right? It's amazing how this was a 200-day moving average. Now it's a 200-week moving average, but it's still pretty viable. I've noticed that when I switch from daily to weekly charts, there's a lot of times where the 200-week also seems to magically act as some sort of support or resistance, or a notable thing. But anyway, long story short is you don't want to see oil like rally back up here and break over $100, because that's just gonna reignite inflation, which is the last thing we want. I mean, now that the price of everything is a lot more than it was, I should say most stuff, but the funny thing is that the real price increases have occurred and I don't have time to get into all this, but back in the day, I mean pre-pandemic, a few years before the pandemic, like you remember negative interest rates and negative yielding bonds and 0.1%. I mean, just basically they called it ZERP and all that. And I thought it was insane. And people think that, oh, interest rates are zero. It's going to be like that forever. And I thought people were nuts because nobody steps back and looks at the bigger picture. And the whole thing is, I mean, we've had a generational lowering of interest rates, and then, and even still, I mean, where we are now, 5% is probably, closer to average than restrictive. But anyway, long story short, the Fed, it's become apparent to me that monetary policy has been creating these inflationary trends for as long as I've been alive, or as long as I've been an adult. Because here's the thing, all that 0% interest rate stuff and all that, it wasn't really creating inflationary pressures in normal stuff, although it would. If you think about what the cost of something like, well, think about the cost of having a child these days compared to I guess my grandparents or something. They're just like compared to the 40s or 50s, right? It's a joke. Like healthcare nowadays compared to the 1950s is insane. But the point I'm trying to make is that sort of monetary policy has been screwing everything up for as long as I've been alive. And when they were pretending there was no inflation, everybody's homes, the home prices were. I remember one year they were up like 19%. Like the numbers came out. The median home price in America was up 19% this year. And then they would come out and say, well, the CPI, was flat. There was no inflation last year. And so that just didn't jive with me. And so by virtue of interest rates being, next to zero for all that time, when Yellen was there and all that stuff, Bernanke and Yellen, and so interest rates were nothing. And meanwhile, home prices in the stock market, like assets, is where the inflation was occurring. They were inflating assets, which was the stock market and homes, and then pretending that there was no inflation in the CPI because, whatever. I mean, I guess, commodities or the price of food, wasn't going up that much. Although I'd go to the grocery store and, prices were creeping up. And so they pretended there was no inflation, and they'd do stuff like they'd say, well, like the price of cell phone service is coming down or semiconductors, and it's always technology saves the day, right? Um, and and you'd think in certain electronic things, like I like to joke about, they always, for some reason, it's like magic. TVs always get better and cheaper, right? And I suppose, economists like to offset the actual rise in cost of living by, pointing out that TVs are better and cheaper. And I won't even talk about the hedonic adjustments, but anyway, long story short, back to my original idea here, this chart of oil looks pretty darn bullish to me. And this is, it's weekly, nothing happens fast. And so, could it drop to $75? Yeah. Could it, spike up to 90? Yeah. But it's something to think about. Put it that way. Something to think about because, well, let's see. There's so much stuff going on, as far as like individual stocks and that. But usually I look at the Magnificent Seven. Just look at them real quick on a weekly chart. Apple's looking a little rough here, right? I might have drawn some trend lines or something on Apple, but clearly you can see sort of, Apple's in a range right now. So it's going to be interesting. I'm having a little bit more fun drawing on the charts here recently, except for, except for these charts are kind of, well, they're a pain, to be honest with you, compared to what I used to use. But anyway, so there you go. That's kind of an ugly looking pattern right there. And so, kind of ugly looking pattern. You can see how bad of a year 2022 was for Apple, right? I mean, it was up at the all-time highs at the beginning of 2022. And I mean, it spent the whole year sort of gyrating and ended like at the lows. So, 180 to 125. Interesting. An interesting stock right now is Tesla because, and we talked about this. I think we looked at Tesla last week. The swings in the price of this stock are absolutely insane. Now the people that believed in Tesla back in the old days, they're just fine. I mean, they've made a fortune. But you remember last week I drew a horizontal line, at the current price, and I was like, everybody that bought, above this line is underwater in the stock, and that's most of the newcomers. So if you go back to say late 2020 here, I mean, you can see the price is trading at the same price it was years back. So the price of Tesla stock has not kept up with inflation if you take point A and point B. But the worst thing about it is that it's just kind of an ugly looking chart, right? It's in a downtrend. It's in a downtrend. The 50-day and 200-day moving average, as you can see, it's below both of those right now, and it's just not. This is not a pretty chart. I suppose I don't know how valid or viable that particular trend line is because it starts like so far back. You could put it right there, but anyway, that's I suppose. Well, I suppose if the scale of that particular pullback there is skewed by the subsequent price action. However, if you zoomed back and looked at that little period, that was pretty significant. I don't like drawing trend lines like that. However, a lot of people do, and so that's probably, if I got my old Edwards and McGee book out, that's probably how they envision drawing trend lines on weekly charts. Anyway, yeah, Tesla's looking kind of nasty, um, although here's the thing, last time it sort of puked and bottomed out at 100, then it tripled. Right? See, that's the crazy thing about this. Like the price from the beginning of 2023 to like mid-year, it tripled. And even from this little spot here, see, 150 bucks, boom, it doubled. And so now, I mean, you're looking at, from that high right there, mid last year, if it goes down a little bit more, you're looking at like, cut in half. And so the percentage moves on this chart are just astronomical. And so, everybody wants to buy a stock for $100 that goes to 400, and nobody wants to buy a stock at 400 that goes to 100. and so the gyrations on this chart are just astronomical. It may, it'll be interesting to see if and of course, think about this. Nothing happens fast on a weekly chart. So, this fall, maybe, well, it could happen faster, but weekly charts tend to, play out really super slow. But it'll be interesting if we ever see it touch this trend line. That may present a buying opportunity. Like you had a perfect weekly pivot low back here, and then that would have been a good time to buy it and take a trade in it. So I'll tell you what, though, this is a great example of, well, I could do a whole show on just using this chart as an example of, say, buy and hold, right? Buy and hold worked for everybody that bought this thing prior to 2020, right? And even 2020. Although I mean, you could have bought Tesla in 2020, almost 4 years ago, and held this thing through all these crazy ups and downs and still be underwater as we speak today. Or it could have been traded ups and downs, but I just want to point out, and I'm running out of time here because got to keep these shows at 30 minutes. I just want to point out this concept here is you take the current price today, and you go back in time, and everybody that has a cost basis, I should say. Yeah, that's a good way to characterize it. So, everybody whose cost basis is above today's price is underwater, and that's got to be a lot of people, because the majority of the price action over the last 3.5 years has occurred above that line. And so I got nothing against it at all. I like to look at it objectively. I can't believe how volatile this stock is. So I like to look at things objectively. I could care less about, the whole EV debate and Elon Musk and, this and that. Although, when you start digging into that stuff, like the idea that Tesla is worth more than, Ford, GM, Toyota, and all this and that, or whatever it is combined, it is kind of a head scratcher, but I don't worry about that. So, the most important companies in the world right now are Microsoft, I guess, and probably NVIDIA. Microsoft, NVIDIA. Wow, this is something. So here's something else. I'll leave you with this. Okay, look at this chart of NVIDIA, right? Just imagine if NVIDIA was in the Dow Jones instead of Intel. Look at the chart. Here's a weekly chart, right? So there's a weekly chart of Intel, right? It's done basically nothing for, a very long period of time. Like I said, draw a horizontal line, on Intel going back going back a few years. This is a weekly chart. Draw a horizontal line going back a few years, and you can see that Intel's, in the same place it was in 2018. And so that's where like things become arbitrary. Like the Dow's kind of arbitrary because at the time I remember when they added Microsoft and Intel to the Dow, right? And so just imagine if, a few years back, imagine if a few years back, or even, a long time ago, say in, 2020 or 2021, imagine if, they said, well, Intel's kind of not really, as much of a bellwether as Nvidia is these days, since Nvidia is making, chips for cars and AI and all this stuff. So we're gonna swap it out. And so I mean the Dow would be at like 60,000 now or something if Nvidia was in there instead of Intel. And so I'm just pointing out how arbitrary things like especially the Dow is, because it's interesting. You can go to Wikipedia and pull up the history of the Dow components or whatever, and it's just really interesting to see, what's been in there, and especially what got kicked out and what got added and how that works, because theoretically it's like I said, it's arbitrary. Is Walgreens still in the Dow? I lose track of this stuff because I don't really pay that much attention to it. So, it's about time to kick if Walgreens is still in the Dow, which something tells me, either I thought about they should kick them out or they have kicked them out. But look at that. I mean, this is 2015. This is a Walgreens has been going downhill for, a decade. And boy, is that an ugly chart. And so, I mean, it has to be, the only thing it can be is mismanagement of some sort, right? Because, I mean, the chart of Costco doesn't look like that. They're both retailers, so I can't explain it. But anyway, that's fun to talk about this stuff. There's a lot going on. Keep your eye on, as far as the S&P goes, still basically at the all-time highs, even though this trend line gets violated a little bit. I'll tell you what, yesterday's low is a pretty good reference point now, right? Because maybe we close this gap and it rolls over. So there's so much support below, unless it's possible that we could get sort of a slow motion, orderly pullback of some sort to the 50-day for, there's always going to be a reason. Like they'll invent a reason after the fact, or some sort of news event occurs that that causes the market to have a pullback or correction. But over the years, every time, and I've been getting this feeling lately, like every time in the back end that I subconsciously think, well, I can't think of any reason, anything that's going to derail this rally, and we're up at the highs, and the whole permanently high plateau thing. Every time that I sit here and I can't think of it, well, something comes along, right? So, like I said last week, this could be similar to 2017 in that, the market just like is real boring all year and there's no 3% correction. It just creeps up, but that's highly unlikely. So anyway, one of these days we're going to see some action. So the action's going to pick up, and so the market takes the it takes the wheelchair ramp up and empty elevator shaft down, so keep that in mind. So I'm just kind of waiting for the action to pick up. So anyway, thanks for tuning in. I'll be back same